Hello again, traders. It's Jeffrey from Ninjacators. If you're just getting into Forex trading on your NinjaTrader platform, today I'm going to explain what pips are and what the spread is in Forex trading. Now, remember, in Forex, we don't trade contracts, we trade lots. A standard lot is 100,000 currency units. That's the size or multiples of standard lots are what big trades are, what the institutions trade. That's what we tend to follow when we're looking at supply and demand zones and how we track and follow the smart money. But we retail traders typically may trade in mini lots. That's a 10,000 currency unit, a micro lot, which is just 1,000 currency units, or even a nano lot, which is 100 currency units. Now, the unit of a currency, the value of a currency movement is the pip. And its value is different depending on the Forex pair because it depends on the conversion rate between the base and the quote currency. And just to remind you, the base currency is the first one of the pair and the quote is the second half. Now, for a standard lot, for example, EUR-USD trade, where the base currency is the euro and the quote currency is the dollar, the US dollar, that's the most heavily traded, most liquid Forex pair. A one pip movement is a one-digit movement of that currency value. So when we look at currencies, we see the value right here along the price line. For example, 1.0710. That little apostrophe 0 is just a decimal place, or that's a point. But the number we're looking for is the fourth decimal point. So if you look at where the value is right now, these are live charts, 1.0745. A move to 4.6 is a one pip move up. A move to 4.4 is a one pip move down. And every one pip move is $10. And so that's for a standard lot. For a mini lot, it would be $1. For a micro lot, it would be 10 cents. Now, if the pairs were flipped, okay, if the base currency were the first half or the first part of the pair, like the USD CHF, for example, the US dollar Swiss franc, then at today's exchange rate, each pip is actually only $8.69, okay, not $10. So it could vary depending on the currency pair that you're looking at. You can calculate the value of a pip in any pair using simple formulas that are all online. You can contact me as well. I'll be happy to shoot you the formulas. Here's my email address. I'm Jeffrey@Ninjacators.com, okay? But there are even multiple apps that you can download on your phone to your computer that helps you calculate the value of a pip. You just input which currency pair, okay? So, once again, any Forex pair has the value printed right along the side in the price column. The fourth decimal place in a typical dollar pair is going to be the pip value, and we're looking at single pip movements equaling about $10. Now, what about the spread? What's the spread? Like futures, there's a bid and an ask price of every single trade that we get into in Forex, okay? But unlike futures, contracts where there is a flat fee per contract for entering into each trade, the cost of entering into a Forex trade is the amount of the spread, okay? The difference between the bid and the ask price. And depending on liquidity, the spread can vary greatly between pairs. The lowest spread is going to be in the most liquid pair, like the EUR-USD. Okay? So when you consider trading any pairs other than the most liquid pairs, the majors, you should always be aware of the spread, as it really could amount to a significant cost of the trade. Now, what's the easiest way to know the spread of any pair that you're thinking about trading? That's the market analyzer. Let me pull it down here. Okay, so here's the market analyzer, and you can actually put a column right on it that gives you the bid-ask spread. The way to do it is you just go into columns, select it from the column list, it's right there, bid-ask spread, add it, and you're good to go. Okay, now how do we read that? Well, it's easy. Here, the Australian dollar US dollar, the spread is 1.8, so that's 1 pip, 8 points, almost 2 pips. Okay, or $20 if you're trading a single standard lot. Okay, here's the lowest, as I said, the Euro USD, and you can see that it fluctuates depending on the amount of supply and demand. But look how it can jump around even in the majors. The least liquid of the majors, the New Zealand dollar US dollar, is over 3 pips per spread. Okay, look at the minors; they're all high, and these are not all of the majors and minors, by the way. Okay, there are many, many more. But as an example, here's one: the British pound Australian dollar. You've got a spread of 6 pips. Okay, and let's see how that shakes out when we actually put a trade on. Okay, so for example, we can leave this here. For example, let's say we're trading standard lots, okay? 3 standard lots per trade. On the Euro US dollar, it's right now about 1.3 pips per lot, okay? So if we were to just put a buy on, okay, immediately we're charged $48 for that trade, okay? So at 1.3, that was, or 1.4, depending on what it was exactly at that point, that's $14, $15 per lot, and so that immediately goes against us, and we had a little bit of a movement against us, so we're going into the trade already 50 some odd dollars down. Now, if we switch to, let's say, mini lots, okay, and here's the difference on the ATM, okay, the lot size, and remember, when we're setting ATMs up in Forex, we're choosing currency and not ticks. We could choose pips as well, but I kind of like to look at things in currency. And each target is going to be a $10,000 unit. We set our stops up just so that, and profits up so that we can move our take profits and stops easily on the charts. But here in a mini lot, if we go ahead and enter, we see right off the bat we enter in at a loss of $4.80, $5.10. So we were a little bit under as well. And hold on, let me pull the market analyzer back up. One sec. Okay, and we were right at about 1.4, 1.5, okay, so that's $1.40, $2.80, $3.20, plus whatever difference there was. Right away, that counts against us in the trade. So we've got to make up that difference to get back to it. That's the spread. Figure it into your trades, and that way you'll never go wrong, and you won't be surprised after you make the trades. Now, in a fast-moving market, you might immediately be in the green if the difference in the movement goes in your favor and makes up for the spread right off the bat. Okay? So that's the easy way to know what the spread is, using the market analyzer. Alrighty? So that's it, traders. Learn how to count in pips when you're trading Forex pairs. Understand how to calculate the dollar value of each pip. Find the formulas online. Check in with me if you need some help getting those formulas, and I'll flip you an email back. And pay attention to the spread when you're trading your pairs, and you'll come out ahead. Good trading, and if you are in our Fast Track program, we will see you in the live sessions. My sessions are on Tuesdays and Fridays. If you have any questions about my strategies, the indicators that you see me use on these clips or in the sessions, feel free to email me. I'll be happy to get back to you. Good trading.